Hello and welcome to another update video about Dogecoin. Yeah, today we saw here a little bit of selling pressure, but nothing substantial. I mean, I think it was yesterday in the video we talked about this ascending wedge here and that you can expect some kind of a breakout normally to the downside in whatever shape or form, maybe in a wave 1 to the upside as a diagonal and then a wave 2 to the downside. That's certainly a possibility that we then start to rally from here in a third wave of the third wave, which should eventually take us into the 14-cent region plus after we hit our support area here for the wave C and reversed already. However, the reversal at this stage is not impulsive, therefore you still need to expect or at least be prepared for another sell-off. So if we don't see an impulse after we hit these support areas, we need to be on the lookout and prepare for still lower prices, which means you could either scale out in resistance if you entered in here or just hold and set your stop loss below the box. But that's just an idea, eventually everybody has to decide that for themselves. I could certainly imagine that we will make one more low here, but if we break out of this corrective price channel to the upside, as I said before, then we have a really good signal that we are already going in the third wave. Yeah, I mean, from a downside perspective, this C wave can max out this entire box and still be in the same scenario, which is a wave 2, which would then result in a third wave to the upside. By the way, I'm not sure why I'm on the 45-minute chart, but if we say, okay, we rallied in a B wave correction, yeah, and we're coming down in the C wave, then this C wave would consist of maybe a wave 1, a wave 2, a wave 3, here possibly a wave 4. They often make these shapes, yeah, kind of sort of triangle patterns or sideways corrections, and then one more leg down. Certainly absolutely possible, not necessarily needed. I think we have enough waves to the downside. Bit of messy action actually for a C wave. Could be an ending diagonal here. But either way, we hit the support area, and sometimes it's better to just be focused on these support areas instead of trying to figure out the smallest detail of the micro count here. Important is to understand now that we really need for a signal that we go up and get into that 14-cent region, that we are breaking out of this corrective price channel. As long as we haven't broken out of the corrective price channel, technically the trend is still down, as we're guided by this downside trending channel, downward trending channel. So we're also below the 50-day moving average, which indicates as well that we are sort of in a short-term downtrend. We can also check where the 20-day moving average is currently. That often provides more short-term information here, also above that price at the moment, pushing it really down. So need a break above the channel, and then ideally also above the 20-day moving average, which is currently at 8.4 cents. And we all were prepared that we can turn around here, because this is the support area that would normally be very relevant for a wave 2 in the current situation. In addition to this support area, you can also calculate the target for the C wave in a little bit more detail, in that we take the length of the A wave, we go to the high of the B wave. You can see here we reached the very first target that's normally common for a C wave, which is here the 8-cent level, the 61.8 extension, which was very much in line here with the golden ratio, the retracement, which is also the 61.8 retracement level. Yeah, the 1-to-1 ratio, which is also very common for a C wave, however, points down to 7.1 cents. That would lie below our support area. I don't normally like them to go below the 78.6 FIB level, so I would actually say if we go below that level, then we have to expect with a higher likelihood that this pattern will fail this 1-2 setup, and that we are actually, didn't want to do that, and that we're actually breaking down, and that we are going to follow the yellow count, which is actually still my preferred outcome, that we will eventually make one more low for Dogecoin. That's why all the bottom structures here are highlighted with an alternative here. I mean, the primary is still to make one more low, just because this is not a solid structure to build an all-time high on, but doesn't mean we couldn't trade it still, right? As I always say, don't trade the primary count, trade what's in front of you. And if you have a setup that works in the alternative count, by all means. This is high reward, low risk. We don't want to be not flexible and to try to avoid at all costs the alternative count. No, it's alternative for a reason, because it's highly probable. Yeah, what people need to understand, there are in theory an infinite amount of possibilities. And what we do here is to identify the 2 or 3 that are most likely. So they are likely. Even alternative wave counts are highly probable. Otherwise, I wouldn't show them. And it's good to be prepared for it and just to trade these setups if you want to trade the coin. Okay, that's my update about Doge. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.